Good morning. Thank you all for coming here today. Today we are here to hear the story of Joan Payden, the president, CEO, and primary owner of the investment management firm Payden Rygel. Joan, who in 1983 left the partnership of a large investment firm to found Payden Rygel, is a trailblazer in the field of investment management. Since her firm's creation 25 years ago, she has overseen its international expansion and its growth to more than $50 billion in assets under management. Payden Rygel was named the U.S. Bond Manager of the Year based on its investment excellence in 2003 by Global Investor magazine. Additionally, along with her brother William, who attended Notre Dame, Joan helps finance educational and vocational projects such as the Sisters of Notre Dame program in Kenya, which appeals to Joan's global nature rooted in her childhood as she lived for some time in Southeast Asia. Originally from New England and now from California, Jo is also interested in investment business, her involvements in Los Angeles, cats, her brother William, and of course us, Notre Dame, which is what brings her here today. Please join me in welcoming Joan Payden.
Thanks very much for that kind introduction, Kelsey. I'm really delighted to be here. It's very special. My brother and I, Bill, attended 2 years here before he went out west and graduated. And every Saturday we're at that television set. So before I start on my remarks, I thought it would be interesting for you to get a little idea of the culture of Payden and Rygel. Investment management firms today, I'm a portfolio manager, a money manager, and it's really been an extraordinary atmosphere. It's a wild ride, and it probably will be for a while. And investment management firms throughout the years, 20, 30 years ago, they were all very much the same. In the last 15 years, they've changed their spots tremendously. I remember, I think it was in the mid-90s, that one of the very large, prestigious investment bankers had a very extensive study on the investment management industry. And they concluded, I remember this was 94, 95, they concluded that unless you were part of a very large organization and managed $150 or $200 billion, you would not exist today. Well, they don't exist today, and here I am. So I thought before I started that I would give you a little idea of what Payden Rygel is. We just celebrated our 25th anniversary, and for that, we have a very short video, just introducing some of the senior people, and actually Notre Dame is a little bit involved, which I'll mention later. So could we put the video on, please?
For 25 years, Payden Rygel has been focusing on delivering the best possible investment solutions to our clients. It's our sole focus. We aren't distracted by shareholders or outside interests.
Payden Rygel is not affiliated with a broker-dealer or a life insurance company or any other type of institution. So there are no hidden agendas in the things that we buy.
Since we really have no constituency to answer to, we can really make the best decision for our investors.
Well, the firm's independence allows us to make rapid decisions in fast-moving markets.
We are not looking to please the Wall Street analysts for the next quarterly meeting.
You know what you're getting when you invest with us.
We do a lot of work for institutional investors, some of the largest, most sophisticated investors, really on 5 different continents.
Payden Rygel has been taking a global approach ever since its founding 25 years ago. Our first mutual fund was a global fund.
We were one of the earliest investors in global investing.
In terms of the offices we have in Europe, offices in Asia, and clients. that we have all over the world, we have access to information on the ground floor.
We're large enough to be a global player. We're small enough to still have a human touch in our portfolios.
We established Payden Rygel 25 years ago with one thought in mind, and that was to deliver investment solutions for our clients. Consistent, no surprises, something that we could be proud of.
The individual that you saw opening the video and the one that closed it is Brian Matthews. He was a 1983 graduate in Notre Dame, and he's been with us 22 years, and he is one of our most senior professionals, also the CFO of the company. You know, when Dan Crossan called me a number of months ago and asked and invited me to be part of this program, I was very flattered and I was excited, and he gave me a number of dates, and October 31 was one of them. And I thought, well, Halloween, why not? Well, little did I know that the end of the month, it's one of the worst, I guess it is the worst month chaotically in all the capital markets globally. And if you're an investment manager, you know, you live by month by month. Everyone wants to know exactly what did you produce in the last month, your clients. Unfortunately, they don't take too much of a long-term projection. So here I am. I thought that I would tell you a little bit about my profession, my career, my experiences, and I would welcome questions after my remarks. I've been at this for over 35 years. And you might be curious how I was introduced to the investment management industry. You know, so many people ask me, what did I prepare for? Did I have a 5-year plan? And I hate to tell you, but I didn't even have a 5-month plan. I don't have an MBA. My undergraduate and some graduate work was done in math, not economics, theoretical math, actually. And I was brought up in Connecticut. And as Kelsey mentioned, I spent about 8 or 9 years when I was small in Jakarta, Indonesia. And my claim to fame there, my father was with a large international chemical company, was that I could speak Malay. And I'm afraid I can't do that anymore. But it taught me one thing, to be sensitive to cultures. And that really has stood me in very good throughout the years, particularly in the profession that I'm in today. After I graduated from Trinity in Washington with my degree in math and physics, I went job hunting in New York City. And I landed a job with a large chemical firm. Actually, it was one of the largest firms that built oil refineries back in New Jersey. And there I was. The first day I walked in, there were 600 young engineers, and 4 of them were women. And I thought I had died and gone to heaven, and I thought it was a pretty good ratio. Well, after I was there for about 2.5 years, it was at Christmas time, I remember a couple years before Christmas, and I was called in, and I thought, well, at least I'm going to get a raise. I had worked hard, I enjoyed it. And there was a little bit of an economic downturn at that time. And they announced to me that they were going to have a layoff of 300 people. And you know, at that stage, your first job, I thought, gosh, that's too bad. I really feel sorry for those people. Of course, I was one of them. And so there I was. Well, after I pulled myself together and licked my wounds for a few weeks, and traipsing around New York City, having a lot of interviews, a large financial institution offered me a job because of my math background, not because I knew anything about stocks or bonds. But they did say they would hire me, but at a discount. It was a large discount. I thought, no one cares about the fact that I can size pipes and size blow-off valves, but I took the job. And you know, I have a quote that I've always remembered that someone told me. It comes from Winston Churchill. And he certainly captured this concept when he said, success is the ability to go from one failure to another without losing any enthusiasm. So I enthusiastically went from an exact science atmosphere to an inexact science, which was investment management. I worked in New York City for a couple of years. My brother moved to California, and for some other family reasons, I moved out. And I thought, if I can get a job out there, which I did, with a large investment firm, actually one of the oldest in the country, Scudder, Stevens & Clark, which doesn't exist anymore. It's merged 2 or 3 different times. It was a big change from engineering. It was technical in nature, but there was another element that was very, very strong, and that was the subjectivity of it. But I enjoyed it, and I think it was the combination of analytics and the people aspect of it. There were a lot of challenges then. One of them was being a woman. They initially placed me with a team that concentrated on managing fixed income in many of the large institutions. You know, at that time, the pension funds of corporations as well as state funds and so forth were forbidden to invest in common stocks. It was really all fixed income. So my background initially was in fixed income, and I found it very exciting. Sometimes that's hard to tell people these days, that bonds are really very exciting, sometimes more exciting than stocks. I became the first woman partner nationally, and later on I found out an interesting thing, that I was not elected on the first ballot. I was elected on the 5th ballot. And I guess the reason was that I didn't play golf, because they held their annual meetings at a very large, prestigious golf club in the East, and of course they wouldn't let women in. So I sat on the porch, but I got back to them. Later on, in the late 70s and in the early 80s, one thing that did change my career, and that was in 1981, going to Harvard, going to the Advanced Management Program. It was a program at that time that was 5 months. It's much shorter now, and there were 160 people, and half of them were non-U.S. And just the interface with those individuals. I came back, and about 2 years later, I decided that I didn't want to be where I was, that I didn't want to find myself 10 years in the same place. And that was a hard decision. You know, and what were my alternatives? My brother was a journalist, also a philosopher, and his answer was, well, start your own business. Now, if you knew me when I was in college, and if they had an election of the person most unlikely to start a business, I might have won. A lot of my colleagues and friends were concerned about my mental state. How can you leave such a good job? But you know, I learned one thing, that the risk is the same in doing something and in not doing something. And I don't think people focus on that enough sometimes. And I concluded that the risk of not doing it was much more important than doing it. And then the wild ride began. Where do I get funding from something like this? Well, I cashed in my 401k. I always urge people, you never know when that comes in handy. I figured we could live for about a year on that. Paid the taxes, and there were 3 people that wanted to join the firm. And that's how I started Payden Rygel. And it was a challenge. What do you call the firm? And I remember sitting around with these 3 individuals, and someone told me it's much more impressive if you name it names rather than inanimate objects. So Rygel was the most senior of the 3, and I gave them 20% of the stock. It was a C corporation because the stock was obviously not worth anything. And I found out later how much that would be. They left the firm about 8 years later, and they had a good lawyer negotiate. And, you know, some of the things that you worry about constantly, when you start a firm, are you going to have clients? Are you going to be able to attract people? And I thought you might enjoy a small anecdote the first year. Every day that first year, I anxiously awaited for the mail to come because I thought, someone has heard of us and someone might want us to make a presentation or whatever. But anyway, one day, this very important-looking envelope came, and I ripped it open, and words jumped out at me: cease and desist and lawsuit. And you'll never guess who it was from. It was from the General Counsel of Rolls-Royce. And they wrote me this very official, sort of not warm and fuzzy letter, saying that our logo was impinging upon their logo. Now, we weren't in the business of manufacturing luxury cars, but that's something I would never have thought of, because there I was standing in an office of 2,000 square feet. Someone had given us a large potted plant as a present, and I thought maybe we have a chance if Rolls-Royce is afraid of us. But during the years, Payden Rygel grew in assets, but the most challenging thing that I had was to attract people that had the same philosophy. I didn't realize how difficult that was going to be, and that you really have to put it as your first priority. Acknowledging the technical and the academics are very, very important, but I soon found out the most important aspect of it was the people aspect. And the investment management business is a business, and certainly over the last 10 years, very creative, very technical, but you should never, if you're thinking of going into that area, forget that people are people, whether they're the chairman of the board sitting around a table, or whether they're the Indian nation that's just opened a casino, or whether it's individual. People are people, and they react the same. And that sometimes is a surprise to people. The questions that I would give potential candidates that would join us were really questions to determine what were their people skills, what was their integrity, immediacy, how would they react in a situation that needed immediacy, and lastly, common sense. You might be surprised at that, but you might be surprised at how many people don't have it. But every once in a while, you would find somebody that really had passion and commitment. And that was exciting. And, Andrew Carnegie once said, enthusiasm is the engine of life, and it's pretty powerful. Because at that time, I really wanted to start a firm that would be excellent in all areas, but most importantly, that people would enjoy it, that there would be a camaraderie. I thought that meant a lot for success. And that doesn't mean that you don't go through a lot of adversities. You might be interested that the individuals that you met on the video were all owners of the firm, and their tenure in the firm has been an average of about 16 years, which is unusual in our business. Sometimes I talk in anecdotes because I think it sort of gives the color of what I do. And about a year or so after I guess it was 2 years after we formed the firm, we had an opportunity to make a finals presentation to a major state retirement board. And in our business, you get business basically through a third party, and that's consultants. And the consultant industry has evolved over the years. It really started in 1974 when the Pension Reform Act came, and there was a lot of abuse on pension funds. So they figured if they had a consultant in between, that they would keep everybody honest. I don't really think that has come to fruition, but in any event, some consultant picked us up. And I was very, very excited. And by that time, we had employed a couple of other senior people. So myself and someone else trooped off to the east. I remember it was a very snowy day. And I can remember to today the atmosphere in the room. There must have been about 20 board members, and I was trying to make the bond market sound very interesting. But I really didn't think I had succeeded. But on my way out the door, the chairman beckoned me, and he had sort of a puzzled look on his face, and he said to me, "Does the bond market really turn the two of you on?" And just couldn't believe it. I certainly said yes, and I sort of thought, well, maybe I'd blown that one. But the next day we got word that we got the account, and found out later that our enthusiasm and passion, they figured that we must have some competency if we were that excited about things. I sort of smile today. If those board members could see the bond market and what we've gone through in the last year, they would have known what excitement was. Day-to-day challenges in the firm continue to be associated with people, trying to build teams, focusing on people's strengths and not weaknesses. And today I really think the human element is being overlooked, and I think it's a mistake. There's no substitute for that personal touch. The judgment factor. And I just can't stress that enough. Kelsey said to me just before she introduced me, she said, people like to know what should they be worrying about, looking for jobs and so forth. And I think that is so important to project competency, immediacy, judgment, and common sense. What we've been going through in the last year and a half, it really has been quite incredible. It's been a meltdown. And the meltdown, it's interesting. With all the analytics and the technical aspects of things, you would have think that this could never have happened. But it did happen. And if I had to pinpoint one thing, it would be greed. It was greed from the investor side that wanted, quote, higher returns in a low interest rate environment. It was greed on the investment bankers in Wall Street. I'll get you product to do that, and I'll create product. And it was also greed on the suppliers side. And the suppliers, it was mostly mortgage product that was put together. And it was a very, very lethal thing with no one looking at consequences. And the jury, I think, is still out as far as how deep and how much pain we still have to go through. To give you a sense, if you walked into our offices today, there's one plaque on everybody's desk, and it says, never assume anything. A few years ago, at a finals presentation to an organization that wasn't very sophisticated, and again, we were talking about strategies and so forth, trying to bring it down to their level. I noticed there were a number of people in the audience that were sort of nodding and looking like they got it. And I was a little surprised. But as I walked out of the room, some of them came up to me and said, we have a bond house in our community. And I thought, no, I don't think that can be. Well, it turned out that they were talking about bail bonds and jail. I'll let you guess what association it was. So never assume anything. Coming back to the climate and what we're facing today, everybody is asking the question, how long is it going to last? And where do we go from here? Commenting on the first question, how long will it last? And will it affect firms like P&R and the whole industry? It took a long time, as I said, to build up these excesses. And I but I personally think it's going to be faster than we realize. And that maybe the risk is that we won't realize how fast it's going to be, and you might miss the boat. That does not mean that it's going to be less painful. I think it's going to be very painful. But the global cooperation has been quite amazing. And it sort of takes an event like this to have that cooperation. Second, what will be different? Well, there are a number of corporate structures, investment bankers, that will never exist, and also securities that will never exist. Company profiles are going to change. And for example, in my business, you have a marketplace out there. You have a marketplace of stocks. You have a marketplace of fixed income. And the fixed income, the marketplace was generated and supported by investment bankers. And it was a fairly lucrative endeavor. And that is gone. But I think there'll be something to take its place, and that's happening today. And certainly job opportunities, too. There'll be a different mechanism, and I think it's going to improve liquidity, lower costs, be more efficient, and more importantly, take in the global marketplace. The next question you're probably asking are, what are the opportunities in financial services? I'll give you my thoughts on that. I think there are going to be huge opportunities in demand. A great deal of wealth has been created over the past decade, wealth from emerging market countries. And monies need to be managed. It's interesting, over the past few years, the buzzword is focused on you have to have uncorrelated assets to reduce risk. One asset goes down, the other one goes up. But this has been tested, and everything is now correlated at 1. It didn't work. But the realization that the capital markets are intertwined, I think, has a huge lesson to all of us. And so that the future, if you do get into this field, it's a different playing field, and I think it'll be a much better playing field. A hard lesson to learn. And, the lesson of capital markets are finite, the derivative marketplace is infinite. And that was a hard lesson to learn also. And how to sort out these opportunities in the management in this type of environment. I'll give you my list, and it's short. Look realistically at the global marketplace. Everybody talks about globalization, but do we really believe it? Do we really believe it in the job market? And do we accept the fact that emerging countries, they have emerged? It's amazing what's going on in Eastern Europe and in parts of Asia. They will be the ones that are going to test the capital markets over the next few years. And much more expertise has been developed than you think. I recently, one of our senior people were in Korea giving a presentation. We did the whole presentation in Korean, and it's amazing how sophisticated these people are. I would like to caution you on something else that maybe it's a personal observation that I had, that we continue to be pretty U.S.-centric in many areas, and it doesn't exist anymore. And I don't know whether we really have accepted that. Many of our clients and prospects that you go to are still talking about investments, U.S. investments, and non-U.S. investments. And can you tell me what country non-U.S. investments are? And many times I've seen sophisticated individuals giving presentations in Asia and in Europe, forgetting where they were. They're the non, not the domestic. We have to get better at this. We've got to be much more aware of cultures. Along those lines, we have about 200 people in the firm, about 150 in Los Angeles. And 6 months ago, someone decided to count how many languages that we spoke. Now, one person speaks more than one language, and we identified 33. And I was really surprised. We didn't go about that, but it shows when you go out and look for people that are interested in this industry that it is truly global in nature. And you know, just concluding about the firm, Payden Rygel is somewhat of an anomaly. First and foremost, we're independent, and we're owned by senior management. This is very, very unusual in today's marketplace. There are very, very few firms we manage about 55 to 60 billion, that are independently owned. Everybody wants to buy you up. We're sort of a mid-sized firm. We're not for sale. And I can't tell you, I think there's huge advantages in independence. You don't have to worry about conflicts of interest in today's world. You can put resources where you want them, both financial and otherwise. You can make quick decisions. They're not always, you know, decisions in our business are very subjective. But the conflict aspect of it is so important today. And it's only going to get worse with more regulations. And it also attracts individuals that share the same values. You want individuals that will thrive in the culture that is best for them. And I would comment on the fact that when I talk to people coming into our industry, most questions are about the technical aspects of things, not enough about the environment they're going to be in. Whether it's a large firm, whether it's structured, whether it's more entrepreneurial, those are so important because I don't believe people will thrive unless their personalities will fit in the culture that they choose. And, you know, I've learned that the most precious asset that you can have is your reputation and your people and your clients. And I'm afraid some of that has gone by the wayside over the last couple of years. But hopefully we'll come back to that. And, you know, I'm sure you've all heard that famous Confucius statement, find a job you love and you won't have to work a day. And, you know, I still am as enthusiastic about the industry today as I was many years ago. I would really welcome your thoughts and your questions. No question is I'll tackle any subject you have. Thank you.
Okay, as we normally do, please feel free to come down to the microphones and ask your questions.
Well, I have one question. Joan?
Yeah.
What would be your advice to people given the state of the market and the economy right now as far as investing goes? If we should invest, which I'm presuming you are going to tell us, how should we choose what to invest in right now?
Actual investments?
Yes. Just given the state of the economy and the market right now.
Well, you know, relationships have really changed over the last. You're talking about markets, equities, commodities, bonds, that kind of thing. Well, you know, it's been an interesting phenomena that the stock market has been, depending upon what indice you take, you know, it's down 30, 40, 50%. But on the other side, balance sheets of companies are really in pretty good shape, particularly the smaller companies and the ones that have had a great deal in the exporting area. And a lot of those smaller companies did not have access to the commercial paper market. So their balance sheets are in very good shape. But their debt, their 5-year, 10-year debt, has been beaten down almost at the same direction as the stock market. So in a lot of these companies, you can buy bonds at a discount that are 14, 15%. Today, IBM 10-year bonds, you can get 10% on them. And I think that will be very competitive with what the stock market's going to do over the next couple of years. It's been a phenomena that you've never seen. And this also exists in a number of overseas fixed income.
There's a lot of information out. There's a lot of information out there that you have to take into consideration more than ever about investing. Like, you have to kind of keep your thumb, I guess, on everything that's happening around the world. So if you were young, where would you go today? What would you read, and who would you seek relationships with?
Well, I'll kind of give you an off-the-page comment on that. It has nothing to do with the investment for the financial industry. I'll tell you a little story. I think the expertise and all that you've learned in business, undergraduate, graduate, the two areas that I think are crying out for needs and getting much more sophisticated are the nonprofit industry and the educational field, secondary education. And I would think that maybe in the next 5 to 10 years that we see opportunities there when you're looking at the nonprofits. And as a firm, we rescued 3 years ago, we rescued a grammar school, and we're running it. It was going to close. And let me tell you, it was harder to run that grammar school than anything else. But there are so many once you get into it, in your ACE program here, people looking at secondary education from the business standpoint, not from the educational standpoint, as opportunities. And that might seem a strange answer, but if you look and read and so forth in the financial services, one thing, if you're interested, the CFA program, I think, is a program that's sort of like a union card. At least getting into the program gives you a leg up on other people. Doesn't necessarily mean you're any smarter, but it does give I think it's a commitment. I think it'll be tough to get jobs in the financial service area right now over the next year or so, but particularly in the nonprofit area, I think there's going to be a lot of opportunities there.
Ms. Payden, thank you very much for being here, first of all. And my question is, you said before that you started out not having a 5-year plan, but looking now ahead, 5 years. And what are your opinions about? Do you think that there's going to be a fundamental shift or an elemental shift in the attitude or the norms in the financial services industry, given all that's going on right now? Do you think that firms are going to be more willing to operate more like a medium-sized firm like yours does operate, and sort of putting aside some of the attitudes and what has led to the turmoil right now? Do you think that there's going to be some sort of shift in how the financial services industry operates?
I would hope so. There's a lot of pain out there. And, have people learned from it? Hopefully so. But, you never know. One thing that might, there's been huge consolidations. And you might see the trend over the next 5 years of some of these being spun off. Parts being spun off. And you saw that, you've seen periods that has happened in the last 20 years. Is it harder to start a company today than it was 25 years ago? Yes and no. To some degree, it might be easier because I think people, after the debacle we've gone through, are willing to look at new faces and new strategies. But the other thing that I found 10 years ago or 12 years ago, if you went over to the UK, it was very difficult to be accepted in Europe. It was the big people. It was the Credit Suisses and the ABN AMROs and so forth. And that has changed dramatically. So I think that there are a lot of smaller firms around. I think attitudes will change. There's been huge disappointments. There's been huge amounts of money lost, and hopefully a little less arrogance. A lot of arrogance in financial service industry that is disappearing quickly.
Joan, we've heard a lot about the $780 billion the $700 billion saving plan here that the government is going to do, the bailout plan. Can you give some examples of how you think that is going to work, or do you not believe that the bailout plan is a good idea?
Well, you know, it's interesting when the rescue or the bailout plan was initiated. It was to sort of unplug the credit mechanism that was broken. And what you're seeing today, which is of a little bit of a concern, is that with the injection of cash in many of these organizations, principally commercial banks, it was for the purpose of lending. And now you're hearing that some of these organizations want to have control over whether they use it to keep it, for acquisitions, for other things. And I think that's one worry, that there will be a lot of discussion and Congress is going to be very unhappy at that. But I think some of the other things that they've done were good things. Getting into supporting the commercial paper market 2 or 3 weeks ago. One of the problems with money funds, there was a run on money funds, and many of these instruments that money funds purchased, there was nothing wrong with them, but the illiquidity, they couldn't get prices. So these funds fell below the 99.5% level, and then they sort of broke the buck, and the Treasury came in and guaranteed them. So a lot of those things sort of, at least temporarily, stemmed the outflow. But on the whole rescue and bailout thing, I don't think you've heard the end of it. I think that everybody's going to try to manipulate a little bit what they want to do with this money. But the credit situation is still very, very tight. I'm in our trading room a lot, and we probably push through a couple $2 billion a day. And you go into the trading room, and we're about 2/3 bonds and 1/3 equities, and the bonds are global. And if you go in and to try to trade, there is no market. Some of these financial institutions have shored up their balance sheet, but they're not putting money out there to take to make a market, and that's very, very disturbing. And I don't think that people realize it. The other day you tried to sell a U.S. Treasury bond that wasn't a current. They called them off the run. That it wasn't a current issue, and the spread between the bids and the asks was 1.5 dollar points, which was unheard of. The problem today is that you've got to get these financial institutions to start making markets and to start lending money, and that really hasn't started yet.
I know you talked about getting the seats in the
I'm thinking about the worst disaster. Let me think. I think it was, strangely enough, it was disappointing about some people that joined the firm. You thought that they had the same outlook and the same integrity and so forth. I remember it was about 5 or 6 years after we started, and really relying on someone and then finding that their agenda was much different than ours was. And that was very disturbing. And I would say that caused me more anxiousness than anything. Because remember, you're depending upon your people going out there representing, we're not selling widgets, we're selling trust. And if you can't depend upon the people, that's very disturbing. As far as getting business and holding business, I'll repeat it again. The key is you don't lose accounts, basically because you didn't perform. You lose it because you've lost the communications. So you're always very concerned about your people, that they're communicating correctly. I was just trying to think. Most of the things you worried about, getting business and so forth. If you're out there pounding the pavements and so forth, and you've got a good product, and you have commitment, you'll be all right. Can I ask a question? How many ever thought of going into the investment management business? Well, those are a lot of hands. Can I ask you why? Can I turn this around? Exciting? I'm sorry, I can't hear you.
People say that you can't, outperform the S&P and the next society to prove people wrong, doing fundamental analysis for everybody's ever doing.
Well, but remember, outperformance comes and goes. What you really want to do is establish longevity with your accounts. And I do think there's a huge opportunity out there today. Just as an example, just domestically, I think I mentioned the Indian nations. They have a lot of money, and they haven't been treated very well, and they need managers to manage the money. A lot of these sovereign wealth funds around are looking for investment managers. And I think they've been disappointed with some of the large multinational managers. So I wish you luck. I think you've got a lot of diversity out there to examine.
Job applicants, yes.
Do you want to know some of the questions I ask? Yes. You might think I'm either crazy or what were the last countries you visited? And, you know, someone will say Mexico or whatever, and I'll ask them, how much did a hamburger cost in their currency? One question that sort of gets to people, we live in California, and just how their minds work, you know. I'll say, just in miles. I know you don't know the answer, but how would you go about the circumference of the Earth in miles? And I remember someone said to me, looked at me rather strangely and said, oh, well, I guess I'd start between how long it was between Los Angeles and New York. And guess what they said? 12,000 miles. Well, that wasn't really a knockout question, but, you know, just how people think and how they communicate. And, you know, questions about, I worry about immediacy. Because when you're in the investment management business, things happen, and you've got to make decisions very quickly. And if you make a mistake, what do you do about it? And you want people there that will have a quick reactive time, that are common sense. I just can't stress that enough. We had an incident, someone over here said, you know, what do I worry about? I worry about errors. We're a fiduciary. And if we make an error, because all this trading is done by word of mouth. I mean, you will, you know, trade a block of a couple 100 million bonds. It's all word of mouth. And what if you say buy instead of sell? That's what I worry about. And very recently, we had a situation with someone, sort of a mid-level person, that found something. It was in currencies. Currencies move so quickly. And they found something, and it wasn't a very large difference. And what did they do about it? They didn't tell anyone. And they called the bank, some very junior level person, and they didn't do anything about it. And this thing hung around for about 2.5 months, and finally it became quite serious. And somebody else fell upon it. And those are the kind of things you worry about, because you can't be everywhere. Somebody that will be reactive and quick and bright, because errors in the investment management business can kill you. Dollars.
We have enough time for another question if we have anyone. I do want to apologize for one thing. I said that Kelsey's name was Kelsey Grammer. I watched too much television, I believe. Actually, her name is Kelsey Larson. She might want to... Wouldn't hurt to be related, obviously, to Kelsey Grammer, but she is Kelsey Larson.
I'm not Kelsey Grammer, sorry to disappoint, but thank you, Joan, for speaking.
Thank you
very much. Well, thanks very, very much for listening to me. I hope I gave you a few clues, and my very best to all of you. If you're ever in California, come see me.
Okay, those of you who are going to lunch, please come forward. Otherwise, make sure you turn in your